Hello, everybody. Thank you so much for joining me today. For today's video, I want to cover Tesla's upcoming compact car that may be unveiled at Investor Day on March 1st through Tesla. And there's so much to cover, so I'm just going to get started right away. To get you caught up on the story, in case you don't follow Tesla very closely, on January 2nd, Tesla announced that they'll be unveiling a bunch of different things on March 1st, which is in about a week. And one of those things is this Generation 3 platform. For those of you that are not familiar, just this Generation 3 platform is assumed to be this cheaper compact car electric vehicle from Tesla that's going to cost somewhere around $25,000 for the consumer to purchase. And I really think that once this is unveiled and it's released to the public, this will completely destroy the auto industry. It's going to be great for Tesla as a company. It's going to be great for people that want to buy an affordable vehicle, but it's going to be disastrous from every other automaker. And let me walk you through why I think this is. First, let me set a baseline of what a lease cost, for example, is today for a Model 3, for a Tesla Model 3. As of today, Tesla offers a Model 3 lease for about $350 a month. This is based on an MSRP of about $43,000 before any destination fees, which is how much an automaker charges to move the car from the factory to the dealer lot, essentially, when you purchase the car. This lease includes $4,500 down, 36 months, and 10,000 miles for the terms for the lease. So $350. This also assumes around 32% depreciation and 6% interest. And the reason why I want to set this baseline is because I really want to demonstrate the gap between where Tesla is today versus its peers and what it will mean for Tesla down the road when they unveil the compact car. If I compare this pricing to a like car, which is a 330i sedan from BMW, the total MSRP is about $44,000, which is roughly in line, basically the same as a Tesla Model 3. However, the monthly lease price with the same down payment, in the same terms and annual mileage, is roughly $300 more expensive, at $200 more expensive rather, at $560 per month. And if we compare this to, say, a Toyota Camry 2023 and LE with basically the base trim, this is a $27,000 MSRP that has actually about the equivalent lease price than a $42,000 Tesla. And so you may ask, how is this possible? How can there be a $17,000 gap in MSRP between the Toyota Camry and the Tesla Model 3, but the lease is basically the same? The reason why is because there is an EV credit that the Inflation Reduction Act that was signed into law last year, and it just went live January 1st of this year. This allows automakers to pass on $7,500 of savings, essentially, through a lease to a customer on qualifying purchases based on an electric vehicle. And that's basically the condition, is that you have to buy an electric vehicle. And also, there's also another component with Tesla where they have favorable residual values because EVs tend to depreciate less than gas cars. And those two things together, of course, are going to give you a benefit from the lease price. So the big question becomes, how does this apply to a car whose starting price is $25,000? And this is where the equation is going to break massively. And I hope you can see what I see, because this is going to rewrite a lot of rules around what it means to actually purchase a car in the very near future. Before we get into that, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people. Thank you so much. I always forget to put the slide in, but today I remembered. So how do we think about this compact car? Here's an article from Dan from Inside EVs that was posted October 20th, 2022, covering Tesla's Q3 earnings report from last year. During said call, Elon Musk said that the next platform will be smaller in size than the Model 3 and Y platform and roughly half the cost. Again, this smaller in size car is going to be that Gen 3 car, that $25,000 car. Musk's comments came during the Q&A session when Tesla executives were asked about any potential developments for the next generation of vehicles. And so if we take that sort of nugget of information and then we apply it to Tesla's most recent earnings reports, we can really start to understand what this compact car is actually going to look like from a cost perspective to Tesla and how much they're going to be able to lease it for to the consumer. So let's go ahead and do some quick math. This is the earnings report from Q4 for Tesla, which outlines their production for the quarter for Q4. If you look at total deliveries here for all their cars, they delivered about 405,000 cars in the fourth quarter of 2022. We can also look at how much it cost them to build those 405,000 cars. And we'll look at that by looking at the total automotive cost of revenues line under the cost of revenues of the statement of operations on the quarterly earnings, which is $15,785 million. A lot of money. It costs a lot of money to build a car. Surprise. But if we take those two numbers, we can actually figure out how much it costs them per car to build a vehicle and deliver it. So we do that by taking the cost of revenues, that $15 billion number, and we divide it by 405,000 units delivered. And that gets us down to a rough average cost of $38,948 for the S, the 3, the X, and the Y, which are the four models, that Tesla sells today. So on average, it costs them about $40,000 to build the cost of the vehicle to ship to you. And based on that statement from the Q3 earnings call back in 2022, the guidance we got from Elon Musk and the Tesla team is that this new compact car is going to be roughly half the cost of the 3 and Y platform. The key thing to remember here with this $39,000 number is that it includes the Y and the S, which are $100,000 cars. So this price is going to be it's going to be slightly higher than what the actual cost of the 3 and the Y is. However, to be conservative, let's take this number anyway, and then apply roughly half the cost to it, which is about $19,474. But in reality, if we just want to round it up and just make it easy for us to do the math, we can assume that this new compact car is going to cost Tesla roughly, once they're at full ramp and they have all the production stuff figured out, $20,000 for each compact car to build. And if we take that and we compare it to what they're saying that they should be able to sell it for, hopefully in the coming years here, of about $25,000, this means that Tesla, under their current cost structure, how much it costs them to build a car today, cutting it at half and selling it for $25,000, this means that Tesla's going to be able to make about $5,000 in profit for each compact car sold, or roughly 20% margin, which for that type of vehicle is completely unheard of. Legacy car makers, when they sell these types of cars, they typically break even or lose money. All their money is made by selling SUVs and pickup trucks. And so if we have these numbers, how much would a lease be? How much would a lease be truly for the Tesla compact car if they are going to be able to sell it at a profit at $25,000. And real quick, I just want to give you a heads up. If you want to be part of my private community and have access to a private Discord and member-only content on Fridays, feel free to click join. You don't have to. Obviously, I'm super, super honored that you're even watching my videos. But if you are interested, you can just click on join right below this video. So what does it mean? How much is the lease is actually going to cost for this compact car now that we know that they're going to be able to make money on it at current costs and $25,000 sold? Let's assume the same rate of this depreciation on this compact car of 32%. And let's also assume a 6% interest rate, just like we did for the Model 3 example. If we put in the asset value into a very simple lease calculator that I found online, it's very easy to find. Google lease calculator. You can do this for any car shopping you need to do. The asset value, which is going to be how much we're essentially buying the car for, I put in $26,000, which is a $25,000 plus the $1,000 destination fee, roughly, I'm guessing, is going to be about that much. And a 32% depreciation over 3 years, 36 months, is going to be about $17,600. How much the car will be worth after 3 years. If it depreciates about 32% after 3 years, we'll apply the same exact interest rate of 6%. And the lease comes out to be $341.51 for this compact car. And you will say, well, but wait a minute, hold on a second. When we were looking at the Model 3, it was $349. So why would I pay the same lease for a compact car versus the Model 3? But here's the big variable we're not looking at right now, the IRA EV credit, which is the reason why the Model 3 was able to even be sold or leased at this price, that additional $7,500 that Tesla could pass on. As long as this bill stays in law for the foreseeable future, and all signs point to this being the case, Tesla will be able to pass on $7,500 in lease savings over the life of the lease to customers. And so if we take this into account, that $7,500 EV tax credit, where it lowers the price from 26,000 to roughly 18,500 in this case. And we again assume that 32% depreciation over 3 years, which makes our residual value 12,000, same 36-month lease term, 6% interest rate. The monthly payment now for this car, for this compact car, this Tesla, is $243 per month. But here is the huge difference from the Model 3. Not only are you getting it for $100 cheaper, it's zero down. You're not putting any money down to reach that sort of monthly payment. Whereas with the Model 3, if we go back a few slides, you were paying $350 a month, but you had to put down $4,500. In this case, with this compact car, as long as all of this holds true, right? Zero down. So you put zero down and you're able to buy or lease a Tesla for $250 a month. Let's put it up against some competition. The Toyota Corolla 2023, the LE 2.0 four-cylinder. The MSRP is $22,745. This is straight from Toyota's website where I can do the lease estimation. Excellent credit scored, $0 down, out of pocket, 36 months, 10,000 miles, same exact terms as the Tesla, no trade-in value, $400 a month. So this Tesla, which is going to come out hopefully in the next couple of years, will be $150 cheaper per month than a Toyota Corolla. And this, I think, is a huge deal. Why is this? With an electric car, not just a Tesla, you also have 50% less fuel costs when you're operating an electric vehicle versus gas because you're not paying for gas. Electricity is cheaper than gas per mile to power a car. You also have a fraction of the maintenance. With a gas car, you have to do oil changes, you have to replace your filters, you have to potentially deal with some coolant, your transmission, catalytic converter. Everybody who owns a car knows what I'm talking about. With an electric car, it's going to be completely different. For those of us that have an electric car, we know that the maintenance is much, much less than a traditional gas car. So you also save money on maintenance. You also have EV driving dynamics. You have a thing where you have the battery at the bottom of the car, which gives you really low center of gravity, and it really helps you with cornering. It just makes the car feel very, very tight. I don't think a Toyota Corolla does that today. Corolla owners, let me know. Last time I was in one, it felt like I was pushing the car forward, and it was crazy. You also get the Tesla performance. In this case, Tesla, with all their vehicles, they're really, really high performance cars. They have really good acceleration, just like most other EVs, really. EVs in general have much better performance than gas cars. Instant torque, really good responsiveness, so on and so forth. Regen braking as well. You also have top tier infotainment. One of the things that Tesla is very well known for is their huge screen that is super, super responsive. You can play music, maps, and all this good stuff on a 15-inch screen. A Corolla or a Kia Rio or a Nissan Sentra, last time I checked, don't have these things. So these are things that are exclusively to this brand, in this case, a Tesla. You also have access to the supercharging network, which is something that Tesla has a huge advantage for. President Biden just last week really gave props to Tesla for expanding their supercharger network so other brands could use it because of how much of an advantage that network gives Tesla in order to charge long distances, the owners to be able to charge long distances. And you also have the ability, but every single car that's built right now by Tesla comes with autonomous hardware. So you would be leasing a car for $250 per month with $0 down, where you could flip a switch in the future and it just drive you. Okay, that seems crazy. And again, all these things, and it's $150 cheaper per month than a Toyota Corolla, right? So to me, this seems like the equation is starting to really, really break when we're thinking about what it means to own or lease an affordable car. And again, it's $0 down. It's basically like renting a thing for $250. You don't have to worry about putting money down, and you get access to this Tesla that could potentially drive you around, and it has all these great features. It's way cheaper to operate, so on and so forth. So let's put this within the context of the US economy and why this is such a huge deal. Why an affordable car at this price level with such a disparity in user set and feature set is such a huge deal. This is from Unusual Whales, a great account to follow on Twitter. I highly recommend you check out this account. As of today, as of February 19th, 50% of Americans cannot afford a $1,000 emergency expense per Fortune, which is a publication. If you're watching this, you probably are in this bucket. It sucks to be in this position. It's It's financial strain. It's not cool. Credit card balances have hit a record high of $986 billion in the US. This is as of February 20th. The average monthly payment for a new car has increased to a record $777, nearly doubling from late 2019, according to Kelley Blue Book owner Cox Automotive. Again, February 20th. The average price for a new vehicle in the US has jumped to almost $50,000, up 30% since 2019, according to JP Morgan. Again, February 20th. There is real, legitimate economic strain on the US economy. And of course, people are free to spend whatever they want and spend whatever money they want. But the truth of the matter is if there is a compelling car that's affordable that people are going to love, it could sell so well that it will surprise a lot of people. And this is and this point here, I think really amplifies this even further. The market for a compelling, affordable car is completely and utterly unaddressed. If you look at what an affordable car is today, if you own these cars, I love you. I'm not saying anything bad about the cars, but let's think about what it means to have a compelling vehicle in this price range. We have things like the Toyota Corolla. We have things like the Kia, I think Rio, right? Correct me if I'm wrong. The Hyundai Elantra. We have the Nissan Sentra. These are cars that are in this pricing bracket that's going to be around $300 a month for a lease with zero down. It won't even be $250 a month unless we're talking about the Sentra and the Rio. They're probably much closer to $250. But they're going to be just as expensive. They're going to be more expensive or just as much as a brand new Tesla with zero down. And again, to reinforce this point, automakers in this pricing bracket make zero profit at these levels. So these automakers have zero incentive to make these cars better because they're not making any money on it. All profits for these automakers come from SUVs and trucks. I challenge anybody to go on every single one of these automakers' earnings reports and sift through them, and you'll see very clearly in their verbiage is that all the money these guys make are from their SUV and truck divisions when it comes to profitability. And that's why we're getting such a hard push to get those types of cars on the roads, because they do not make money on these lower trim, affordable cars that I would argue are not compelling. And that's why they're not selling nearly as well. And so one of the pushbacks I usually get from this statement is that, but there's no demand for them, for those types of cars. There's no demand for them. That's why automakers aren't making them. That's why they're making the SUVs and trucks, because that's really what the people want. Let me go ahead and play video. This is from 1997. This is Steve Jobs at a developers conference. I think what he says here is super compelling, and it applies very, very closely to what I'm talking about here. This video is about 2.5 minutes. I think it's fascinating. If you watch this before, you know exactly where this is going, probably. But let's go ahead and watch this together. Let me go ahead and make sure I mute the video. Here we go.
Yes.
Mr. Jobs, you're a bright and influential man.
Here it comes.
It's sad and clear that on several counts you've discussed, you don't know what you're talking about. I would like, for example, for you to express in clear terms how, say, Java, in any of its incarnations, addresses the ideas embodied in OpenDoc. And when you're finished with that, perhaps you could tell us what you personally have been doing for the last 7 years.
You know, you can please some of the people some of the time, but one of the hardest things when you're trying to affect change is that people like this gentleman are right in some areas. I'm sure that there are some things OpenDoc does, probably even more that I'm not familiar with, that nothing else out there does. And I'm sure that you can make some demos, maybe a small commercial app that demonstrates those things. The hardest thing is, how does that fit in to a cohesive, larger vision that's going to allow you to sell $8 billion, $10 billion of product a year? And one of the things I've always found is that you've got to start with the customer experience and work backwards to the technology. You can't start with the technology and try to figure out where you're going to try to sell it. And I've made this mistake probably more than anybody else in this room. And I've got the scar tissue to prove it. And I know that it's the case. And as we have tried to come up with a strategy and a vision for Apple, it started with what incredible benefits can we give to the customer? Where can we take the customer? Not starting with, let's sit down with the engineers and figure out what awesome technology we have, and then how are we going to market that. And I think that's the right path to take.
I don't have to tell you how successful Apple is today. And I really think the analogy here is very, very apt. So there's a lot of very close parallels here to be drawn between that open dock and legacy auto and Java and Tesla in this case, where Steve Jobs was clearly talking about how focusing on the customer experience is incredibly, incredibly important, and giving them something that's incredibly compelling, and in this case, extremely affordable versus its peers, versus figuring out how to make the thing you have work as much as possible so you can make as much money, and then convince the market that this is what they want, which I really think this is what legacy auto has been doing with SUVs and trucks, and this is the hole that they've put themselves in. If you track year-over-year car sales, you can see that the car market is shrinking every single year since 2018. Every single year. And this is why. And I think this is exactly why that dynamic exists. And so take this running list and you tell me if this is compelling as a customer. If Tesla were to release a compact $25,000 car at some point into the future, say in the next 2 to 3 years, that it would cost, just based on the math we did, $250 a month with zero down. It would have access to a supercharger network that's best in class. It has the performance of an EV with great performance, low battery to the ground, really good dynamics, great infotainment, which is what Tesla is known for in the entire auto industry, 50% or more savings in fuel costs, almost no maintenance compared to the gas car, and including autonomous hardware where you can flip a switch and the car drives you around. Why wouldn't this be a compelling solution for a customer, regardless of what the auto market looks like? Would this car sell? That's the question I would ask. Would this car sell? If Tesla has the ability to get the cost down to make money on this car, which some of the math we did proves that that's potentially right, proves potentially, a little bit of oxymoron, but the math seems to be there, would this product do well in the market? And so the question becomes, how many could Tesla sell? How many could Tesla sell if this becomes a reality? And that's what I want to hear from you in the comments section. Tell me if I'm off base. Tell me if I'm thinking about this incorrectly, if I'm too much pie in the sky, hopium, whatever, whatever you want to say. This video is really intended to start a discussion about the potential transformation of the auto industry, especially here in the United States, with the upcoming release, the potential release. A lot of us are speculating, but I really do think there will be a release of a compact car in the next 2 to 3 years that Tesla will sell for about $25,000. That's going to enable them to completely destroy really the fabric of what it means to be an automaker, especially in the United States. Let me know what you think in the comment section below. And before we move forward, or really finish the video, if you want to support the channel by purchasing some merch, I have a description for that I have a link for that in the description below. This is some of the shirts and what they look like. And I also have a coupon for Athletic Greens where you get free travel packs and also some vitamin D as well. Consider doing that to support the channel. Okay, I hope this was informative and helpful. Long presentation. It's a lot of variables here. Obviously, I'm making some claims that might seem like crazy to probably a lot of people, but I really think this is inevitable. And what Tesla has been working towards with their scale and the manufacturing capability and their ability to come out with an affordable car, I think it's going to break the car market in ways that a few of us truly understand. And this is my prediction of where it's going to go. Obviously, I think it goes without saying that Tesla is going to perform extremely, extremely well here with this type of car if they choose to release it. And we'll see how much they can sell. My gut tells me it will be more than anybody thinks. Anyway, I hope this was helpful, informative, and I hope you found it of value. Thank you so much for watching. We'll see you in the next one. Take it easy, everybody. Bye-bye.